It was just dawn when Daniel realized he'd been up all night again. The first thin light of morning filtered through his curtains, sweeping away the clutter on his desk. Crumpled notes, cold coffee, failed analyses, and the languid glow of a laptop screen frozen on a blood-red portfolio page. The silence in the room was heavy, as if the very air itself had sensed the weight of his mistakes. He leaned back slowly, rubbing his face with both hands. 6 months. Over 6 months, he watched his savings dwindle like water evaporating from a hot pavement. Nearly 40% of it was gone. Not stolen, not swindled, lost by his own decisions. Worst of all, by his own impulses. His chest tightened again. It wasn't the money that hurt the most. It was the realization that perhaps he wasn't the logical, analytical person he'd always imagined. The market had exposed a deeper feeling within him: fear, confusion, despair. And these had guided his choices more often than logic ever could. His eyes dropped to a worn paperback, half buried beneath the loose sheets at the edge of the table. He pulled it out and dusted the cover. The Intelligent Investor, Benjamin Graham. He'd bought the book years ago, but had placed it at the bottom of every reading list. It was too slow, too boring. At least that's how he used to visualize it. Back then, he'd been chasing excitement, not understanding. But now, in the quiet defeat of a sleepless morning, the book didn't seem dull. He turned the pages slowly, his eyes lingering on a familiar sentence he must have overlooked before. The investor's biggest problem, and even their biggest enemy, is probably themselves. The word stung. He gently closed the book and dropped it onto his lap. For the first time, he admitted something he'd never wanted to say out loud. Perhaps the problem is me. This admission didn't make him feel weak. It made him feel strangely lighter. He remembered exactly where everything had started to go downhill. It was almost embarrassing. A viral video, an overzealous influencer, and an impulsive trade simply because everyone else is buying. He never checked the financials. He never questioned his absurd optimism. He never considered whether it was his own belief or someone else's exaggeration. And when the price dropped, he panicked. He sold and lost. He couldn't even blame the market. The market hadn't forced him. His emotions had. He looked back at the book. Graham had lived through wars, depressions, rampant speculation, and crashes, yet he approached the market with a calm, almost gentle logic. How did a man afflicted by poverty and tragedy acquire such a stable mind? Daniel wondered if fear had driven Graham's decisions, or if he had simply learned to bow fear to reason. A line flashed through his mind. Warren Buffett once said of Graham, "To be a successful investor, you need a solid intellectual framework and the ability to keep your emotions from eroding it." Daniel sighed. His framework was shaky at best. And his emotions? He pressed his palms together, staring at the screen covered in green numbers. There it was, the scene of the crime. The wreckage of hasty decisions. "Why did I keep doing this?" he whispered. Fear, of course, but not just any fear. Fear of falling behind. Fear that everyone else would get richer while he stayed put. This fear now had a modern name, FOMO. But Graham had recognized it long before hashtags existed. In Graham's world, it was simply irrational behavior. People mistake noise for opportunity, excitement for proof, and the belief that everyone else knew something they didn't. Daniel thought back to the first time he'd truly felt it. A coin flew across social media, and thousands of strangers were sharing rocket emojis and exclaiming it was the next big thing. Seconds later, feeling like he was catching a speeding train by the last handle, he bought it. But that train didn't rise. It derailed, and it took some of his savings with it. He should have sold it months ago, but fear had clung to hope. It wasn't a rational hope. Perhaps it was a delusional hope that he would somehow be proven right, without initially understanding why. It was funny, in a dark way. Every mistake he made had a specific emotion. He bought out of greed. He held out of denial. He sold out of fear, and repeated out of ignorance. Then Graham's voice whispered through his thoughts. Price is what you pay. Value is what you get. Daniel had followed price every step of the way. He never stopped thinking about value. Value required effort. Value required understanding. Value required patience. And patience had never been his strength. He stood up and stretched his numb neck. The room was cold, but the new clarity was warm. He walked to the window, parted the curtains, and watched the slow-motion sunrise. The world outside, everyone else, didn't care about the market. The birds didn't care about interest rates. The trees didn't stress about adjustments. The sky wasn't red or green. It was just sky. Maybe I was living with the wrong mindset, he murmured. His life had begun to revolve around numbers. Every morning, every meal, every night. He had turned the markets into a measure of his self-worth. Wins made him feel smart. Losses made him feel inadequate. The emotional ups and downs were no longer about money. They were about identity. This time, he sat down more calmly. He opened a notebook to a blank page and wrote a single sentence. My first enemy is fear. Then a second sentence. But fear is only powerful when I refuse to face it. A strange feeling, bordering on relief, washed over him. Fear was no longer a mysterious shadow. It had a shape, a name, a form, and naming an enemy made it vanquishable. He returned to Graham's book, flipping through the pages at random as if searching for an invisible guide. His eyes fell on a sentence that felt almost frighteningly personal. An investor who allows himself to be unduly influenced by daily market movements is doomed to failure. He was completely, shamefully himself. He had allowed the market's mood to dictate his own. When the market was anxious, so was he. When the market was euphoric, he'd jump with it. When the market crashed, so would he. But Graham's approach was the exact opposite. He didn't react to the market's emotions. He observed them. He studied them. He even used them to his advantage. Daniel wondered how much pain he could have avoided if he'd learned this lesson sooner. Perhaps the losses he'd suffered weren't tragedies, but tuition fees. He'd paid for an education he'd never cared about before. His eyes darted around the room again. The graphics on the wall, the inspirational quotes from modern gurus, the scattered prediction notes he'd thought brilliant back then. Now they all seemed childish, like the refrigerator drawings a parent praises not out of conviction, but out of kindness. He felt ashamed, but it was a productive kind of shame, the kind that signified growth. He closed the book slowly and leaned back again. For a moment, he imagined sitting across from Graham like a mentor, silently watching him grapple with the lesson every investor eventually faces. Your success isn't based on what you buy. It's based on what you believe in and what you learn to ignore. Daniel whispered, almost as a confession, I think I'm avoiding reality. And the silence of the room agreed. He looked back at his notebook. He wrote another sentence. I will be the kind of investor who thinks before I react. But he felt something was missing. He added, I will be the kind of person who doesn't panic from the shadows. He let out a deep breath. Perhaps this was the real beginning. It wasn't the day he opened his first brokerage account. It wasn't the day he made his first profit. It wasn't the day he followed the hype of a phenomenon. This moment, this quiet, humble, brutally honest moment, felt like the first real step in his investing journey. He knew his fears wouldn't disappear overnight. He wasn't naive. But now he was aware of something else. Fear loses its power when you stop running from it. And Daniel had stopped running. He closed the notebook, stood up, stretched, and waited for morning to settle in the room. A soft resolve began to form within him, something stronger than excitement, quieter than hype. Something Graham would have approved of. He whispered to the empty room, almost smiling. Lesson 1, understood. And that was only the beginning of Daniel's transformation. He had conquered his first enemy, fear, but 6 more mistakes lurking in the shadows were waiting to be revealed. Mistakes that had cost him money. Mistakes millions of investors still make every day. Mistakes that Benjamin Graham warned about decades ago. But what happens when Daniel confronts the second enemy? The one Graham considered even more dangerous than fear? Daniel spent the rest of that day in an unusually calm state. It wasn't peace. Peace was too generous a word, but the quiet that comes right after a storm, when the winds have weakened but the air is still thick with the memory of chaos. He moved slowly, deliberately, almost as if he feared sudden movements might break this new fragile clarity he had found. For the first time in months, he didn't open his portfolio app every 10 minutes. He didn't refresh charts or scroll endlessly through finance posts. He simply let the day exist without forcing it to revolve around numbers. It was uncomfortable, but also strangely liberating. Later that afternoon, he made himself a cup of tea and sat by the window. The steam rose in soft curls, disappearing into the air like thoughts that no longer needed to be held. He took a sip and looked outside. Children were playing in the street. A dog barked in the distance. A neighbor watered her plants with the same casual rhythm she probably used every day. The world was calm. The world was normal. The world didn't care about the stock market. And maybe, he thought, he shouldn't either. Not every second, not every breath. He reached for the intelligent investor again. Not with desperation this time, but with curiosity. With humility, he began reading the opening chapters slowly, absorbing each line the way a starving man eats his first real meal. Careful, grateful, determined not to waste a single piece. Graham didn't write with flashiness. He didn't try to impress. His tone was solid, grounded, and deeply rational, like a teacher who knows that anything worth learning is worth learning slowly. What struck Daniel most was that Graham didn't promise quick wealth. He didn't sell fantasies. He sold discipline. He sold patience. He sold reality, not dreams. And Daniel realized that the whole reason he avoided this book for years was because it didn't offer what he wanted back then: excitement. But now excitement felt like a trap he was finally escaping. As he read, a subtle discomfort grew in his chest. It was the discomfort of recognition, the unpleasant awareness that the next mistake Graham warned about wasn't fear. It was something darker, something he had been hiding behind, something he had mistaken for confidence. He closed the book just long enough to whisper the word: ego. He didn't want to admit it, but he had been investing not to build wealth, but to feel smart. Every trade he made was secretly a performance for himself. Every win inflated him. Every loss threatened him. And so he clung to bad decisions far longer than he should have, simply because selling would mean admitting he was wrong. He remembered one trade in particular, a tech startup he bought early on, convinced he had discovered something others hadn't. When the stock began falling, he didn't sell. He doubled down, then doubled again. He refused to accept that the company's fundamentals were weak, that the warning signs were glaring. He convinced himself that the market was wrong and he was right. By the time he finally sold, the loss was so large it felt like a punch to the gut. Even then, he didn't blame himself. He blamed the market. He blamed the economy. He blamed manipulation. Anything to avoid blaming the mirror. He turned back to the book and imagined Graham shaking his head with gentle disappointment, not anger. The investor's biggest obstacle is often the refusal to be wrong. Yes, that was it. He had been terrified of being wrong, and that terror was disguised as pride. He looked around his room, noticing how messy it had become. Not just the physical mess, the emotional one. A room where every object seemed to carry the weight of denial. He stood up and slowly began cleaning. He threw away old charts, recycled pages filled with impulsive drawings of price predictions, deleted screenshots of tweets he had used to justify bad decisions. The more he cleaned, the more he felt something loosening inside him. He was letting go, not just of clutter, but of illusions. When he finished, the room looked spacious again, almost unfamiliar. He sat back down and breathed deeply. It felt like the first real breath he had taken in months. Night crept into the room, filling it with soft shadows. He didn't turn on the lights immediately. Something about the dimness felt right, like a visual reminder of how easily the mind can be fooled by its own darkness. He opened his notebook again and wrote, "My second enemy is ego." He tapped his pen on the page thoughtfully. Fear had driven him to panic. Ego had driven him to stubbornness. Both had cost him money. Both had cost him clarity. He tried to remember when ego first became part of his investing identity. Maybe it was the first time he made a big profit. He remembered that moment clearly. The numbers went up, and something in him changed. It wasn't joy, it was superiority. A dangerous kind of pride, the kind that whispers, "You're special. You're different. You're smarter than the rest." He believed it, and that was the beginning of his downfall. He spent the next hour revisiting old emails and journal entries. He found messages he had written to friends bragging about undervalued gems he had discovered. He found old notes where he confidently predicted price movements, as if he had some hidden insight others lacked. The arrogance in those lines made him cringe. He whispered into the quiet, "I wasn't investing. I was performing." He shook his head in disappointment at his younger self. The false confidence, the theatrical certainty, the delusion that he could outsmart the market without understanding it, it was childish. He could see that now, but he wasn't angry at himself. Not anymore. Anger wasn't useful. Truth was. He leaned back in the chair and tried to imagine Graham's approach to ego. It wasn't that Graham lacked confidence. He had confidence, but it was earned, grounded in research and logic, not emotion. Graham didn't try to be brilliant. He tried to be reasonable, and that made him brilliant. Daniel looked at the laptop screen again, but this time with a different mindset. The losses still hurt, but they no longer defined him. They were data, information, lessons. He clicked open the portfolio and began analyzing each position honestly. Not defensively, not emotionally. Honestly, he saw exactly where ego had led him astray. Overexposure to trendy sectors, buying without research, holding through downturns out of pride, ignoring red flags because he wanted to be right. He shook his head, almost amused by how obvious it all seemed now. He wondered how many people were making those mistakes this very moment, convinced they were exceptions. He whispered, "The market humbles everyone eventually." He noticed something interesting. Once he looked at the numbers without ego, they didn't scare him anymore. They were just numbers. Some represented mistakes. Some represented hope. But none represented his identity. That realization felt like shedding an old skin. He turned the page in his notebook and began writing a list. At the top, he wrote, "Rules I wish I had followed before." Then he listed them. If you need to be right, you will lose money. If you seek excitement, you will lose focus. If you ignore reality, reality will not ignore you. If you avoid admitting mistakes, they will compound. If you let ego trade for you, expect ego-sized losses. He stared at the list for a long time. It wasn't complete, but it was a beginning. The night grew deeper, and Daniel finally turned on the lamp beside him. The warm glow softened the room, and for the first time in a long time, it felt like a place where learning could happen, not a battleground of anxiety. He flipped to another page and wrote, "I will not need to be right. I will aim to be rational." A subtle contentment spread through him. Not pride, not excitement, just contentment. He had lost money, yes, but he was gaining something far more valuable, self-awareness, and that was something he could build on. He closed the notebook, turned off his laptop, and stood up. He walked to the window again. The street was quiet now. Lights glowed softly behind curtains. A distant car passed, its headlights briefly cutting through the darkness. He whispered to his reflection in the glass, "I'm becoming someone new." The words didn't feel forced. They felt earned. He turned away from the window and headed toward his bed, feeling a steady determination rising inside him. A grounded determination, the type Graham wrote about. The type investors rarely achieve because they focus on strategies instead of themselves. Daniel smiled faintly as he pulled the blanket over him. He wasn't the investor he used to be, and he wasn't yet the investor he wanted to become. But he was on the path. And tomorrow, he would face the next enemy, one even more deceptive than fear or ego. He closed his eyes, unaware that the real challenge, the one that would test everything he was learning, was approaching faster than he expected. Daniel has conquered fear. He has humbled his ego. But the market has one more shadow waiting for him. A mistake woven so subtly into every investor's mind that most never even notice it happening. A mistake Graham considered one of the most dangerous traps of all. Morning light crept through the blinds as Mark sat at his kitchen counter, staring at the untouched coffee in front of him. He wasn't thinking about caffeine. He was thinking about vigilance, the quiet kind Benjamin Graham preached. The kind that wasn't loud or dramatic, but steady, almost invisible, like a watchman pacing the same stone wall every night without failing. The prior day with Graham had been unsettling, not because Graham's words were harsh, but because they were true. Mark felt like someone had reached into his head and rearranged the furniture, leaving the place unfamiliar but cleaner. He checked the clock. 5:42 a.m. Too early for most people, but the perfect hour for someone who had spent the last few years letting markets, news cycles, and impulse decisions run his life. Today needed to be different. He pulled out a notebook. It was old, with bent corners and smudged lines, but inside it contained every fragment of advice he had ever underlined from Graham's books. Half quotes, half Mark's sloppy interpretations. He turned to a page he hadn't read in years. Investing is not about excitement. It is about responsibility. He whispered it like a mantra. Responsibility for his money, his future, his choices, his reactions. He closed the notebook slowly, and then he heard the knock. A slow, rhythmic tap, not impatient, not urgent, just certain. Mark opened the door, expecting a neighbor, maybe a package delivery. Instead, there he was again. Benjamin Graham. The same calm eyes. The same deliberate presence. No explanation for how he was back, or why, or what set of cosmic or psychological rules allowed this man, dead for decades, to walk into his home like a mentor checking in on a struggling student. But Mark didn't question it. Not this time. "Good morning," Graham said, stepping inside with the polite confidence of someone who respected time, his and others. "You look like you haven't slept." "I didn't," Mark admitted. "Good," Graham replied. "You were thinking." He sat down at the kitchen table, folding his hands in front of him. "You're ready for the second mistake." Mark swallowed. "Yesterday was rough. I wasn't expecting." Truth rarely schedules itself according to comfort, Graham interrupted gently. Then he looked up, eyes sharp. "Mistake 2. You chase stories instead of studying reality." Mark felt heat rise in his chest. He knew exactly where this was going. Graham leaned back. "You ever notice how the most dangerous investment is always the one that arrives wrapped in a fantastic narrative?" he asked. "Dramatic profits, revolutionary technology, secret opportunities, they pull you in because they speak to your imagination, not your intellect." Mark remembered the electric car startup he'd thrown money at. The CEO had been charismatic, brilliant, almost hypnotic. The story promised a world-changing battery, except the world never changed. All he got was a glossy brochure and a tax write-off. I thought I was being visionary, Mark said quietly. You were being entertained, Graham corrected. It didn't feel insulting, just accurate. Graham reached for Mark's notebook, flipped to an empty page, and drew a line straight down the middle. Story on the left. Evidence on the right. This, Graham said, tapping the page, is the difference between a gambler and an investor. A gambler listens for drama. An investor looks for proof. Drama excites the pulse. Proof preserves the capital. Mark stared at the two columns. It stunned him how simple it looked. Every time you analyze an opportunity, Graham continued, force yourself to place every piece of information into one of these columns. If the left side fills faster than the right, walk away. Mark imagined what his portfolio would look like today if he had done that. Probably thicker, probably calmer, probably his. I want to show you something, Graham said, standing. They walked to the living room, where Mark kept an old wooden box filled with documents, contracts, statements, trade logs, everything he didn't like to look at but refused to throw away. Mark placed it on the table and hesitated. You want me to open it? You must, Graham said. Confrontation is the first step toward correction. Mark lifted the lid. The box wasn't just a box. It was a graveyard of past decisions. Joint venture forms from the real estate deal that had collapsed. Trade confirmations from options he barely understood. A glossy pamphlet for a space mining company he had once convinced himself would change everything. Brokerage statements showing profits that had evaporated almost the instant they appeared. Mark exhaled slowly. I didn't see what these things really were. Graham nodded gently. Because you never asked the right question. What question is that? He leaned forward. What problem does this investment actually solve? Silence. Mark blinked. I never asked that. No gambler ever does. Mark felt a sting, but it was deserved. Graham continued. A true investment solves a real problem. A company supplies something that must exist. A property serves a need that won't vanish overnight. A stock represents earnings, not dreams. But a story? A story solves nothing. It only satisfies the part of you that wants to escape boredom, uncertainty, or fear. Mark swallowed. Had every bad investment of his life come down to escaping something? Graham seemed to read him. The market gives you two choices, Mark. You can buy illusions, or you can buy truth. Illusions are louder. Truth is quieter. Illusions promise speed. Truth offers durability. Choose durability. Slowly, Mark nodded. Good, Graham said. You're beginning to reconnect with your reason. But then his expression shifted, just slightly. Enough for Mark to notice the temperature in the room changing. We're not done, Graham added. Because the third mistake is the most silently destructive of all. Mark braced himself. What is it? Graham looked him directly in the eyes. You mistake movement for progress. That sentence hit harder than any investment loss Mark had ever suffered. Because he knew, instantly, it was true. He thought of all the times he'd opened 5 trading apps in a single morning, chased micronews, shifted funds, sold early, bought late, reacted. He always felt busy, but never better. You confuse activity with achievement, Graham said softly. Hyperactive investors believe they're doing more when they trade more. But the market rewards those who do the right things, not the most things. Mark sat heavily in a chair. Then why do I feel guilty when I'm not doing anything? Because you have been conditioned, Graham said, to believe that motion equals control. It doesn't. Many times, motion is simply panic in a sophisticated disguise. Mark felt a lump in his throat. I don't want to live like that anymore, he said. Graham's face softened. Then you won't. He placed a hand on Mark's shoulder, reassuring, steady. The greatest investors do less. They observe more. They wait longer. They intervene only when wisdom demands it. He walked toward the window, looking out at the awakening city. The market is a theater of noise, he said. Your task is to decide which sounds matter. Mark absorbed that in silence. After a moment, Graham turned back. You've grown more in one day than some investors grow in a lifetime. Now, we must prepare for the next phase. What's the next phase? Mark asked. Graham smiled faintly, understanding the enemy within. A chill climbed Mark's spine. Am I going to like this part? No, Graham said, but you will need it more than all the others. And then, exactly as before, Graham began to fade, his form dissolving like smoke rising toward the ceiling. Wait! Mark stepped forward, but Graham's final words drifted into the room like a whisper of dust. Control yourself, or the market will. And then he was gone, leaving Mark alone with an open wooden box full of old mistakes, and a realization that his next lesson wasn't about the market at all. It was about himself. The rest of the morning passed in a strange, suspended quiet. Mark felt like something inside him had shifted, subtly but irrevocably. The kind of shift that doesn't make noise but changes the direction of a life. His apartment felt different too. The wooden box of old financial wounds still sat open on the table, papers fanned out like the remnants of a storm. He didn't know whether to burn them or frame them. They were painful, but for the first time, he didn't look at them with shame. He looked at them with recognition. These weren't failures. They were teachers, and every teacher had a lesson he hadn't understood until now. Mark stood, stretched his shoulders, and poured a fresh cup of coffee. He checked the clock. 9:12 a.m., too early for lunch, too late for breakfast, just perfect for an existential investment crisis. He walked back to the table and sat down. Graham's last words echoed. Control yourself, or the market will. The enemy within. He knew what that meant even before Graham would say it. Fear, greed, impulse, ego, certainty, arrogance, panic. Every emotional spike that had ever pushed him into a terrible decision. He swallowed. Enemy within, he murmured. Yeah, that tracks. But he wasn't prepared for what came next. The air in the room shifted. Not colder, not warmer, just heavier, as if the atmosphere had thickened with meaning. Mark froze, the hair on his arms lifting. This time, Graham didn't appear immediately. It was different, more gradual, almost like he was materializing from the walls themselves. And then he stood in front of Mark once more, his presence quiet yet absolute. But something in Graham's expression was different today. More serious, more penetrating, more human. Sit, Graham said gently, though Mark was already sitting. We have reached the fourth mistake. Mark nodded slowly. I'm ready. Graham held his gaze for a long moment before speaking. Mistake 4. You react to emotions instead of reasons. Mark clenched his jaw. He had known it. He had felt it. He had lived it. Every terrible trade, every panic sell, every FOMO-fueled buy. All emotional reflexes masquerading as financial decisions. Graham walked around the table and touched the rim of the wooden box. These papers, he said, are not evidence of ignorance. They are evidence of emotional submission. Mark frowned. Submission? Yes. Graham turned toward him. You bowed to your emotions. You let temporary feelings make permanent financial consequences. He tapped the box once with commanding clarity. Fear told you to sell. Greed told you to buy. Anxiety told you to trade. Excitement told you to risk everything. And you obeyed every single one of them. Mark felt the words hit, not like accusations, but like truths he had avoided articulating. I wanted to feel in control, he admitted. And emotions convinced you that reacting was the same as controlling, Graham replied. But emotional reactions are not control, Mark. They are the loss of it. Graham sat across from him. Tell me, he said quietly. When you made your worst financial decisions, what were you feeling in your body? Mark blinked. He wasn't expecting that question. I don't know. You do. Graham leaned in slightly. Describe it. Mark hesitated. Then he sighed. Okay. When I sold early during that market dip, I felt this tightness in my chest. Like something terrible was about to happen, and I had to escape it. Graham nodded. Fear. And when I bought that high-flying tech stock at its peak, I felt this rush. Like if I didn't act right that second, I'd miss something life-changing. Greed wrapped in urgency, Graham said. And when I kept trading, opening new positions every few hours, Mark paused, embarrassed. I think I just felt bored. Or restless. Oh. Graham's lips curved slightly. The most underestimated emotional force in investing, restlessness. A bored investor is a dangerous investor. Mark exhaled, rubbing his temples. I didn't realize how many decisions came from feelings, not facts. No investor ever realizes it while they're doing it. Graham then reached for Mark's notebook again. He drew a large circle on the page. Inside it, he wrote one word. Impulse. Then he drew a much smaller circle next to it. Inside it, he wrote, Reason. Most investors, Graham said, pointing at the large circle, live here. They think they're being rational, but they're reacting to inner noise, fear of missing out, fear of loss, excitement, insecurity. He tapped the small circle. Successful investors operate here. Quiet, patient, deliberate, reason-based, not emotion-triggered. Mark stared at the circles. The imbalance between them made his stomach knot. How do I shrink the emotional circle? He asked. You don't. Graham closed the notebook softly. You learn to ignore it. Mark's eyebrows lifted. Ignore? Yes. Graham folded his hands. Your emotions will always exist. They are part of being human. Your task is not to silence them. Your task is to stop letting them drive the car. Mark inhaled slowly. So how do I do that? Graham smiled gently. Awareness. He leaned back slightly. Let me tell you something few investors ever learn. When you notice an emotion rising, fear, greed, excitement, that sensation is not a signal to act. It is a signal to pause. Mark felt something click in his mind. Pause. Just that one word. A tiny break in the chain between urge and action. A chance to breathe instead of react. A chance to choose. You must train yourself, Graham continued, to recognize emotional spikes as warnings, not instructions. Warnings of what? Mark asked. Warnings that your judgment is compromised. The truth of that was so clear it almost hurt. Graham stood and walked toward the window again, hands clasped behind him. The market will always whisper, he said. It will always tempt. It will always provoke. It will always test your nerves. But emotions are short-term. Wealth is long-term. And long-term money cannot be built with short-term feelings. Mark nodded, deeply. I understand. No, Graham said softly. But you are beginning to. He turned from the window, approaching with the same calm certainty. There is more you must see. He motioned for Mark to follow him. They walked to the bathroom. An odd place, Mark thought, until Graham opened the mirrored cabinet inside. Look. Mark stared at his reflection. Graham stood behind him, his voice low. This is the face of the person you are investing against. Mark swallowed. You think the market is your opponent, Graham said. You think other traders are your rivals. You think hedge funds, or algorithms, or billionaires are your competition. Graham pointed at the mirror. They are not. Mark's chest tightened. Your only opponent, Graham said, is the version of you that panics, rushes, and reacts. The room felt impossibly quiet. Mark couldn't look away from his own eyes. Master him, Graham continued, and every mistake you've ever repeated will end. Fail to master him, and every wise decision will eventually collapse. Mark nodded slowly. A heavy, sincere nod. A nod that came from a place of recognition, not agreement. I know, he whispered. I know I've been fighting myself this whole time. Good, Graham said. You are finally seeing clearly. Then Graham stepped back, fading slightly, not fully gone, but dimmer, like a photograph losing contrast. There are 3 mistakes left, he said. 3 deeper, more subtle, more costly errors. Mark turned to him. I want to learn them all. You will, Graham replied. But first, his voice softened, like a warning. You must be ready for the 5th mistake. What is it? Mark asked, his heart pounding even harder in his chest. Graham's body, the air around him, shimmered. He looked directly at Mark, not harshly, but with the seriousness of someone about to reveal something deeply personal. The 5th mistake, he said, is the one no investor believes they are guilty of until it ruins them. And then, just like that, mid-sentence, mid-breath, Graham disappeared again, leaving Mark alone with his reflection and the nagging awareness that the hardest lessons still lay ahead. That night, he couldn't sleep. Mark lay in bed, staring at the ceiling, and heard Benjamin Graham's words echo in the deep silence of his apartment. The 5th mistake is the one no investor believes they are guilty of until it ruins them. The sentence had sunk into his skin, etched there like a tattoo, not in a worried way, but more like a puzzle he couldn't stop trying to solve. What mistake could be so invisible, yet so fatal? He replayed every bad decision he'd made, every impulse trade, every FOMO purchase, every panicked sell. He had faced fear, greed, boredom, insecurity. He had admitted to chasing stories, confusing movement with progress, reacting emotionally. What was left? What mistake had he not yet recognized? Sometime around dawn, exhaustion pulled him under. When he woke again, sunlight was spilling across the wall in soft gold strokes, but the rest of the room felt strangely dim, like the light didn't reach far enough. Mark sat up slowly, rubbing his eyes. There was someone sitting in the chair at the foot of his bed. Calm. Still. Waiting. Benjamin Graham. Mark jolted. Jesus, could you warn me next time? Graham's lips curved in a subtle, amused line. Warning removes necessity. So does knocking, Mark muttered. Graham ignored that. You're awake, he said. Good. We must address the 5th mistake before it grows roots. Mark sat up straighter. What is it? Graham didn't answer immediately. Instead, he stood and walked across the room, touching the spine of a book on Mark's dresser. Tell me, he said, why do investors love confidence more than truth? Mark frowned. Confidence makes you feel safe. False confidence makes you feel safer than truth ever could, Graham corrected. He turned, his eyes sharp but not unkind. Mistake 5. You believe you are smarter than the market. Mark's breath hitched. He hadn't expected that. He hadn't even considered it. I don't think that, Mark protested. Graham raised a brow. Don't you? He asked. Every time you ignored data because your gut felt right. Every time you traded quickly because you believed you could outmaneuver others. Every time you assumed a trend could not reverse simply because you decided it wouldn't. Mark opened his mouth, then closed it, because he saw it, an uncomfortable truth unrolling inside him. I didn't think it was arrogance, he whispered. I thought it was intuition. Graham nodded slowly. The most elegant disguise arrogance ever wears. Mark swallowed hard. Are you saying I'm not smart enough to time the market? I am saying no one is. Graham sat back down in the chair, folding his hands. Believing you are smarter than the market is not a conscious thought. It is an attitude, a tone in your decisions, a subtle bias that whispers, you see something others do not. Investors rarely admit to this, but their portfolios reveal it clearly. Mark looked down at his hands, remembering the times he'd convinced himself a drop wasn't coming, or that a rally would continue, or that he could beat the professionals. He remembered feeling clever, smarter, more perceptive. He hadn't realized that sense of superiority was a trap, a delicious, intoxicating trap. I didn't know that was arrogance, he said quietly. I thought I was being decisive. Decisiveness without discipline is recklessness, Graham replied. He stood and walked to the window. Do you know what the market does to those who believe they can outsmart it? Mark shook his head. It punishes them with opportunities. It gives them early wins. Just enough success to inflate their confidence. Just enough accuracy to make them mistake luck for skill. Mark froze. He knew that feeling. He had lived that feeling. The most dangerous moment in a gambler's life, Graham continued, is the first time he wins. Because he thinks he understands why. Mark felt the words settle over him like dust. He had won early. A few good calls. A lucky stock pick. A fortunate exit before a drop. He had believed those wins meant something about him. Graham turned from the window. I want to show you something. He motioned for Mark to follow him into the living room. When they reached the table, Graham opened the wooden box of old trades and pulled out a single sheet. A bright green trade confirmation from Mark's early investing days. His largest early win. Graham held it up. This, he said softly, did more harm to your investing life than any loss you ever experienced. Mark stared. But that trade made me thousands. Yes, and that is why it wounded you. Mark felt a tightness form in his throat. You believed this when meant you had skill, Graham said. You believed you had insight. You believed you could replicate it by doing more, taking more, risking more. That trade was luck, Mark whispered. That trade, Graham said, was bait. Mark sank slowly into a chair. He felt sick, not physically, but morally, like he had uncovered a flaw he didn't want to admit existed. I didn't know I was being arrogant, he said. No one ever does, Graham replied gently. Arrogance in investing isn't loud. It is subtle, quiet, sometimes even humble-looking. Mark raised his gaze. So how do I stop it? Graham placed the trade slip back into the box. You replace ego with evidence. He sat across from Mark. Every time you feel certain, ask yourself, what facts support this? What facts oppose it? What would I think if this idea came from someone else? Would I still trust it? Mark nodded slowly. What else? He asked. You accept, Graham said, that you will never outsmart the market, only outlast it. The room felt heavier with each word. Longevity, Graham continued, is intelligence expressed through patience. Outlasting the market requires humility, and humility is the antidote to this fifth mistake. Mark took a deep breath. I understand, he said. No, Graham replied softly, but you are closer than yesterday. For a moment, the room was quiet. Then Graham stood. We must move on. Already? Mark asked. There is no time to waste, Graham said. Mistake 6 is the one that drains investors slowly, quietly, over years. Mark felt his pulse quicken. What is mistake 6? Graham looked at him with an expression that was both stern and compassionate. You ignore the cost of your decisions. Mark's eyebrows knitted. The cost? Yes, Graham said. The unseen cost. The opportunity cost. The cost of what you could have earned if you had simply left your money alone, or placed it somewhere wiser. The cost of unused patience, of unnecessary trades, of emotional choices, of chasing illusions. Mark exhaled. So, every decision I make has a hidden price. Every decision you make, Graham said, has several. Mark leaned forward. Teach me. Graham nodded once. I will. But first, you must gather everything. Every statement, every trade log, every forgotten position, because mistake 6 cannot be taught with theory. It must be shown. Mark felt something tense and electric roll through the room. Graham's outline flickered softly, as though he were becoming less solid again. I will return, he said. Prepare your records. Then, like a candle being blown out, he disappeared, leaving Mark alone in the quiet apartment, surrounded by papers that suddenly felt heavier, and a dawning realization that the next mistake might hurt more than all the others combined. The apartment felt unsettlingly silent after Graham vanished, not an ordinary sort of quiet, but the kind that makes thoughts echo louder. Mark stood in the middle of the living room, surrounded by scattered papers, receipts, trade logs, statements, screenshots printed on flimsy office paper, evidence of decisions he had made without ever considering their true consequences. Prepare your records. He wasn't sure why Graham needed them. Not really. But deep down, he sensed it. Mistake 6 wasn't going to be about failure. It was going to be about reality. And reality had a weight to it. He spent the next hour opening drawers he hadn't touched in years. Old folders, dusty envelopes, binders full of charts he'd once used to convince himself he'd mastered technical analysis. He found brokerage statements stuffed between books on his shelf, scribbled notes on napkins, even a few printed screenshots of news headlines he had impulsively traded on. He stacked everything on the floor until the pile looked almost absurdly tall. A monument of noise. A sculpture of neglect. The hidden cost of a decade of unexamined decisions. Mark sat back on his heels and whispered, "Okay, it's all here." A soft breeze brushed the back of his neck. Then, a familiar voice. Good. Mark didn't jump this time. Graham's presence had shifted from something shocking to something inevitable, like gravity. Mark turned slowly, already knowing he'd see him. Benjamin Graham stood near the window, dim outlines of sunlight passing through him, like he was made of memories instead of matter. "Are you ready?" Graham asked. Mark swallowed. "I think so." "No," Graham said. "You are willing. That is better." He stepped toward the mountain of documents. "Mistake 6, Graham said, his voice firm but calm, is the most underestimated force in all of investing. He touched the top page. The mistake of ignoring the cost of your decisions. Mark shifted uncomfortably. "I know bad trades cost money." Graham shook his head. "I am not talking about direct losses. I am talking about the unseen losses. The invisible ones." He sat on the edge of the couch, gesturing for Mark to sit too. "Do you know," Graham asked, "what the most expensive thing in your investing career has been?" Mark exhaled slowly. "Bad choices?" "No." "Missed opportunities?" "No." He leaned closer. "Time." The word landed with more force than expected. "Time," Graham repeated softly, "is the only currency in investing that never replenishes. Money recovers. Markets recover. Even mistakes recover. But time, once spent, is gone forever." Mark stared at the pile of documents. "How much time have I wasted?" he whispered. "Enough to hurt you," Graham said, "but not enough to doom you." His voice softened. "Let me show you." He pulled a random trade statement from the pile. "You bought this stock 5 years ago," Graham said. "You held it for 8 days before selling it out of boredom." Mark rubbed the back of his neck. "Yeah, I remember that." "During the same 5 years," Graham continued, "the stock rose by nearly 220%. Mark felt heat rush to his cheeks. He hadn't lost money, but he had lost time. Years of potential growth. Silently. Invisibly. Permanently. Graham picked up another paper, an old options trade. "You lost $900 on this position," he said. "But the true cost was not $900. What was it? You sold stable, long-term assets to fund it. Assets that would have doubled in value by now." Mark's chest tightened. "So the real cost was what those assets would be worth today?" "Yes," Graham said. "And more. The emotional cost. The stress. The cognitive energy. The distraction. The loss of compounding. Mark looked down. The papers blurred slightly, not because they moved, but because his eyes stung. He didn't realize tears had formed. Graham said nothing about it. He simply continued sorting through the documents with quiet, firm purpose. Every sheet he lifted revealed another unseen cost. A mutual fund he sold because a headline scared him, which then went on to outperform the market for 4 straight years. A promising investment he abandoned after a single week of stagnation, which later became a 10-bagger. A stable dividend stock he traded away for quick excitement, costing him not just growth, but years of passive income he would never get back. After a while, Mark whispered, "Why didn't I see any of this?" "You were not trained to see it," Graham replied. "The market trains investors to obsess over prices, not consequences." He stood and walked around the pile slowly. Every pointless trade, every impulsive entry, every premature exit carries a cost. But because you cannot see that cost immediately, you assume it doesn't exist. His eyes lifted, sharp and clear. That assumption is what drains investors dry. Mark nodded, overwhelmed. "I just didn't know." "Most people don't," Graham said. "That is why we are learning now." Then Graham knelt. A surreal sight. This dignified man from another era kneeling among a chaos of papers. He pulled out one final folder, thicker than the rest. "This," he said, "is your greatest cost." Mark frowned. "What is it?" Graham handed him the folder. Inside were dozens of pages documenting every moment Mark had pulled money out of long-term investments to chase something short-term and seductive. "I didn't think it mattered," Mark whispered. "Ah," Graham said softly. "The universal lie." He tapped the folder. "This is the cost of impatience." Mark felt that sentence in his bones. Graham stood again, brushing imaginary dust off his trousers. "You think your mistakes were your losses," he said. "But your true mistakes were your interruptions." "Interruptions?" "Yes. Interrupting compounding. Interrupting patience. Interrupting strategy. Interrupting your own progress every time boredom visited or excitement whispered." He paused, letting the weight of that settle. "Money grows slowly," Graham continued. "But mistakes? They grow instantly." Mark closed the folder. "I didn't realize how much I'd stolen from myself." Graham's expression softened. Not pity, but understanding. No investor ever does until they count the cost. For a long moment, neither of them spoke. Then Graham said, "There is one more thing you must understand." Mark looked up. "This mistake," Graham said, "is not about the past. It is about your future. Because ignoring the cost of decisions leads to the 7th and final mistake. The mistake that turns investors into lifelong victims of their own habits." Mark's breath caught. "The 7th mistake?" he whispered. "Yes." Graham's tone darkened, not angrily, but gravely, like someone preparing to reveal a truth that most people never face. "It is the mistake that keeps you poor even when you have knowledge, even when you have experience, even when you have resources." Mark stood. "What is it?" Graham answered quietly. "You refuse to create a system." Mark froze. A slow, cold shiver ran down his spine. Graham moved closer. "Without a system," he said, "your emotions return. Your impulses return. Your mistakes return. Everything we've learned disintegrates." His voice became tender. "The market won't destroy you. Your lack of structure will." Mark felt a heavy twist in his chest. "So the last mistake, not having a plan?" "No," Graham said. "Believing you can succeed without a plan." Mark swallowed. "When are you going to teach me?" he asked. Graham's face darkened, and there were faint glimmers of transparency. "Tomorrow," he said, "because the last lesson is the longest, the most complex, the most important." He stepped back, his gaze gradually fading. "Rest, prepare, and be ready." The seventh mistake will change everything. However, he disappeared, leaving Mark surrounded by the invisible cost of every decision he made. Knowing that tomorrow wouldn't just be a lesson, there would be a reckoning. The next morning, Mark woke earlier than usual, a restless energy buzzing under his skin. He didn't reach for his phone. He didn't open the portfolio app. Instead, he pulled the folder of all his old trades onto the kitchen table. His hands trembled slightly as he flipped through the pages, remembering Graham's words. Without a system, everything you've learned unravels. He hadn't wanted to hear it. He had wanted a shortcut, a single secret, a magic formula. But Graham didn't give secrets. He gave truths. Harsh, simple, and uncompromising truths. A soft voice spoke from the corner of the room. "Good morning." Mark turned. Benjamin Graham stood there, calm, certain, as if the years had never passed. "You're ready," Graham said. "I think I am," Mark whispered. "I've spent all night reviewing all of it. The trades, the costs, the emotions." Graham nodded. "Good. Now we tackle the last and most dangerous mistake. The one that keeps investors from ever mastering themselves." He walked toward the table and laid a hand gently on the pile of papers. Mistake 7. You trade without a system. You rely on intuition, luck, and impulse rather than rules. You believe experience alone will save you, but it will not. Without a system, every emotion, every story, every reaction will drag you back into the same traps we've studied. Mark swallowed. I've always thought a gut feeling was enough." Graham's expression was steady but sharp. Gut feelings are only useful when they are tested against a disciplined process. Discipline transforms intuition into skill. Without it, intuition is a blindfold. He pulled out a blank notebook from the shelf. "We will build your system today, step by step." Mark's pulse quickened. Graham began. "Step 1. Define your goals. Not vague goals, specific, measurable goals. Wealth is not a goal. Growth is not a goal. Specify the returns, the risk tolerance, the time horizon. Everything else flows from this clarity." Mark took a deep breath and wrote down. Preserve capital first. Achieve a 10% annualized return. Hold investments for at least 3 years unless fundamentals change. Step 2. Create your criteria, Graham continued. What makes an investment worthy of your money? Earnings growth? Low debt? Margin of safety? Decide, and do not bend these rules for stories or hype. Mark scribbled furiously, creating checklists and minimum requirements. Step 3. Set clear decision points, Graham said. When will you buy? When will you sell? What metrics trigger action? And, most important, stick to them. Mark paused. Even if the market screams at me? Especially then, Graham said. The market's noise is your enemy without rules. Step 4. Track everything. Every trade, every reason for entering or exiting, every emotional reaction. Awareness without recording is only memory, and memory deceives. Mark opened a fresh spreadsheet, labeling columns. Date, ticker, reason, outcome, lesson learned, emotional state. Graham nodded approvingly. Step 5. Review regularly. Not daily, not hourly. Weekly or monthly reviews allow patterns to emerge. You will see your mistakes before they compound. Mark paused, realizing the depth. He had never approached investing like this. Every trade he'd made was reactive, a reaction to headlines, tweets, or the tug of his own emotions. He felt like a child seeing the world in color for the first time. Step 6, Graham said, is the hardest for most. Accept limitations. You will not win every time. You will miss opportunities. You will make mistakes. Accept them. Learn. Move on. Do not punish yourself unnecessarily. Mark exhaled. He had been punishing himself his entire investing life. Graham leaned closer. And finally, step 7, patience. The system is only effective if executed patiently. Time is your ally. It compounds in your favor when you resist the temptation to react to every passing event. Mark nodded slowly, writing down the steps carefully. Each word felt like a brick in a foundation he'd never built before. Graham's voice softened. Mark, you faced fear, ego, chasing stories, confusing movement with progress, reacting emotionally, ignoring costs, and now you've seen the final mistake. But knowledge alone is not enough. Implementation is everything. Mark looked up. I understand. I'll follow it. Good, Graham said, standing. Systems protect you when luck fades, when fear returns, when emotion knocks. Without one, all the wisdom you've gained will vanish in moments of distraction. For a long pause, neither spoke. Then Graham added quietly, remember, the market does not punish the disciplined investor. The market punishes the undisciplined. Everything else, fear, greed, emotion, are your choices, not the market's. Mark nodded, feeling the weight of the truth. He had spent years blaming the market. Now he knew the truth. The market had been neutral all along. His own mistakes, repeated over and over, had been the real cost. Graham's figure shimmered faintly, his presence beginning to fade. One last thing, he said. The journey does not end here. You must continue learning, continue observing, and always, always respect the margin of safety in your investments and in yourself. Mark felt a strange calm, deeper than he had ever known. Thank you, he whispered. Graham's final words drifted as he disappeared. Tomorrow, a new challenge will rise, and your system will be tested in ways no textbook can predict. Mark sat quietly, looking at the notes, the checklists, the spreadsheet, and the blank pages yet to be filled. He finally understood that the lessons weren't about money. They were about mastery, mastery over decisions, emotions, and habits. He closed the notebook and looked out the window at the city awakening. Markets would open soon. Headlines would scream. Tweets would tempt. Numbers would fluctuate. And for the first time in his life, Mark knew he was ready. Not because he could predict, not because he was clever, but because he had a system, and systems, unlike humans, don't panic. The mistakes that had cost him years, thousands of dollars, and countless sleepless nights now had a purpose. They had taught him, shaped him, and prepared him. Mark smiled softly. He could almost hear Graham's voice whispering on the wind. Invest well. Live wisely. Let time and discipline do the work you couldn't. And as he looked back at his notebook, a subtle sense of anticipation rose within him. For the next challenge, the next story, was already waiting. Mark conquered his fear. He suppressed his ego. He stopped chasing stories, controlled his impulses, and established a system. But the market never stopped testing him. Tomorrow, the headlines will tempt him. Prices will fluctuate. Emotions will run high. Will Mark follow the system, or will he let human nature destroy him? Subscribe to the next chapter of this journey and find out where discipline, patience, and strategy collide in the ultimate test of an investor's resolve.